looking at it as why the hell wouldn't it go up in the face of all of this craziness and inflation and blah, blah, blah. They know that. So they step on it, make everyone say, see, it's a piece of crap. Don't buy it. Right. That's right. Until the suppression ends. And one of these banks that have been shorting breaks ranks to cover and the whole thing blows apart, or worse yet, a failure to deliver. You see a failure to deliver in London on one of these major banks. These banks aren't just bullion banks. They have their fingers in every financial pie across the globe, and the contagion, the systemic reaction would be very dangerous. Well, to
Also,
be fair, it was above its all, it reached its all-time high 2 weeks ago or so at $54. But I get your point. I understand it. And you could argue, I could argue, and again, fine line between conspiracy and reality. You have 8 Western banks that have maintained out of 1,000 plus commodities traded on the COMEX, the largest concentrated short position in any commodity ever traded on COMEX, and that is in silver. Why? That's a question that should be asked more than anything. Of course, you don't have any journalistic integrity anymore in the media, so they don't ask why. Why would JP Morgan be allowed to be the custodian of the world's largest silver trust, SLV and GLD, but SLV, after paying the largest fine the Justice Department ever handed out of $920 million for spoofing or manipulating the silver market? Now, many people thought they should have been brought up on RICO charges. People should watch Chris Marcus' Arcadia Economics channel and Google the podcast he did with Bart Chilton, who was the former CFTC commissioner, where he talks about this, admits a lot of this stuff I'm saying, and he dies a week or 10 days later. Now, could have been, they say it was natural causes. Maybe, probably was. I'm not saying there's a link between it, but he spoke out to what JP Morgan has done in the market. And very clearly, Chris Marcus, Bart Chilton, Arcadia Economics, watch it. Everyone who owns gold should watch it. And silver. But the thing is this, the why to me is fairly easy if you have an open mind, and that is that the military industrial complex needs massive, massive, massive amounts of silver to manufacture high-tech weaponry. Go to silverwars.org and you'll see how much they need. They used to publish it within the supply demand figures from the Silver Institute. They now omit it. We've had over a 200 million ounce shortfall between supply and demand for 5 years running. The military industrial complex is running the country, running the world in the respect that they're the ones who are making these decisions. In essence, this is what we were warned about a long time ago, but they make high tech weapons and sell them around the world. Who owns the majority of the weapons manufacturers? Well, that's BlackRock. Who's the other primary custodian of SLV with JP Morgan? Oh yeah, that's BlackRock. There's a 81 or 2 million share short position right now in SLV, which drives the paper price down, and then they go in and take it and do what with the money? Do they buy physical? What do they do with it? I don't know. We'll have to figure that out later. We don't have enough time to talk about it. But my point is this. You look at BlackRock, who is in many respects, in terms of their ownership of all of the weapons manufacturers, highly tied into, if not part of the military industrial complex, who makes high-tech weapons that need massive amounts of silver, from cruise missiles to ICBMs to F-35s to stealth bombers, you name it. They all have tons of silver in it. And this is not just in the United States. These are the UK, France. Have all been in cahoots with this. Standard Chartered Bank, HSBC. These are all the banks that were told, by my belief, by their respective Western governments, step on the price of silver, don't let it go. We need silver inexpensive enough so we don't get crowded out of the trade. And it's not even about the price going high, it's about its diminishing in nature. It's disappearing. Ask Keith Newmeyer, he'll tell you it's coming out of the ground at 7 to 1. He's told me that personally for years. 7 to 1, but it's priced at 88 to 1. It was priced at 16 to 1 for 5,000 years. So a company like BlackRock, who is the primary custodian, along with JP Morgan, of the world's largest silver trust, and there's an 81 million share short position, which, in my opinion, should be legal. In essence, you're creating shares out of thin air that aren't backed by silver. Even they came out and wrote in the prospectus that, be careful shorting this. There could come a time where you can't get the shares or the metal back and you could be exposed to a huge squeeze. But the point of it is that they're the custodian of SLV with JP Morgan, and they are in many respects the military industrial complex. So when we sell weapons all around the world to places like the Ukraine, and Ukraine gets blown up, who gets the reconstruction contracts? Yes, that's right. It's BlackRock. And so when you talk about why has silver not performed, it's because there are 8 Western banks that have held the largest concentrated short position in the history of the COMEX market. But as I've said for 2 years now, slowly, methodically, the BRICS nations are exposing this. And they have been standing for delivery. That's why the LBMA has its lowest amount of silver in ever since they started keeping records, about 150 million ounce float against 2 billion ounces in paper contracts that could stand for delivery. They're trading 600 million ounces a day in paper contracts. What could go wrong? And that's why you're seeing this panic. This is why they slammed the price of silver down, in my mind, the other day, and a whole bunch of silver that somehow flew to London to keep the thing going, that maybe gave them another month or two, ease the stress. That's why London was T plus 8 weeks most of the year for delivery in a market that is T plus 1 day. In other words, T trade day plus one settlement. The third day, the bar should be moving. Sorry, they said, for a good portion of the year, the Bank of England, we have a shortage of manpower and trucks in London. We're not able to move your metal fast enough. That means they got caught with their pants down. It's close. And it's because the countries around the world who are now coordinated, motivated, sophisticated, and wealthy say, aha, you want to play this game? We'll beat you at it. We'll suppress the paper price too, and we will stand for delivery as well because now we're wealthy. And now we see what you're doing. In fact, we're smarter than you. We will use your suppression of the paper markets against you. And that's what's happening. And someone in the West, I think, thank God, got to Trump and said, if we don't do the same thing, we're dead. And now you have the US government proposing and already in draft form reclassifying silver as a critical mineral. It will have its day. Um, and the deliveries by the most not only well-funded, well-informed traders in the world have been bleeding dry all the silver they can that's not nailed down. You have China, the second largest producer in the world, flying all across the globe, largely in Latin America, Peru, Mexico. They're buying doré right from the miners, like Keith, and concentrate, which is a byproduct of sludge. Doré are the crudely refined bars, and sending them back. They pay double what the West will and send them back to China to refine it in themselves. This is the second largest producer of silver in the world. Why would they do this? They see the big picture. And they've been using the stupidity and our hubris of suppression, keeping the military industrial complex able to get silver without the world rushing to get it, knowing its true value, looking at it as why the hell wouldn't it go up in the face of all of this craziness and inflation and blah, blah, blah. They know that. So they step on it, make everyone say, see, it's a piece of crap. Don't buy it. Right. That's right. Until the suppression ends. And one of these banks that have been shorting breaks ranks to cover, and the whole thing blows apart, or worse yet, a failure to deliver. You see a failure to deliver in London on one of these major banks. These banks aren't just bullion banks. They have their fingers in every financial pie across the globe, and the contagion, the systemic reaction would be very dangerous. So yeah, silver will have its day. The only way you can manipulate a market for a very long period of time is to push it in the direction that it is going. And they've been able to do that quite handsomely for a long time until all of a sudden we're the most well-funded and well-informed traders across the globe, including here in the United States, understand the significance of standing for delivery instead of rolling forward paper promises. The same thing I'm talking about on steroids. The only thing I would caution is that, you could look at the mining shares as the sponges floating on the surface of the bathtub. You pull the plug, they'll all fall, including the mining shares. But I do think from a standpoint of undervaluation, as gold and silver have risen to these levels, the mining shares until just recently hadn't cooperated. And so, yeah, you have mining companies right now that have um, a lower cost of production than the price is at. They're flush with cash. And I think it's a tremendous place to put your money. But I think that I look at it as a pyramid, where the base of your pyramid would be things like paid for real estate and physical metals and assets. The middle portion would be something like 60-day treasuries or utility stocks throwing off a yield, a dividend with a little more risk, but still relatively conservative. And then the pyramid, the top of the pyramid, 10, 15% would be mining shares and cryptos. And the theory is you lose every penny that you put into it on the top 15. You don't make nothing on the middle 20 or 30. As long as the base of your pyramid is moving at a couple, 2, 3, 4%, you're in good shape. Well, gold has averaged 9.9% per year since 2000. So you're doing well. In other words, to me, you don't invert your pyramid to speculation. But if things go well, you'll make more money on the top 10% than you would on the bottom 90. So it's a Swiss-based formula they've used for 300 years. It's just mitigating risk and making sure that you never invert your pyramid to speculation. In other words, you don't gamble with your retirement and your future. There is a piece of your portfolio that you can, but to gamble with the majority of it is lunacy, and that's kind of what I'm getting at. But the potential and the leverage is unbelievable. There's, again, this is just a generalization, but there's probably more market cap in Coca-Cola than there is in every mining share on the planet combined. So, you know, there's plenty of room to see growth in the mining share industry.